My dear students, welcome back to our channel. In this video, I will be explaining the Bcom 6th semester subject Cost Control Management Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 5. The first important short question is 1. Cash flow analysis, as 3 meaning. Cash flow analysis means studying how cash comes in and goes out of a business. It is explained in Accounting Standard 3 as 3. It shows movements of actual cash, not profits. There are 3 types of cash flows. 1. Operating activities, cash from daily business work. Example, cash received from customers, paid to suppliers. 2. Investing activities, cash from buying or selling assets. Example, purchase of machinery, sale of land. 3. Financing activities, cash from loans or capital. Example, issue of shares, repayment of loans. Example, if a company receives 50,000 rupees from sales, buys a machine for 20,000 rupees and repays a loan of 10,000 rupees, the cash flow statement will show these clearly. Easy tip to remember. Cash flow tells you where your money went. It helps in knowing if the business is healthy and if it can pay bills on time. 2. Calculate cash flows from operating activities from the following information. Sales 5,40,000 rupees. Purchases 3,40,000 rupees. Wages 50,000 rupees. Advertisement 20,000 rupees. Let's calculate cash flows from operating activities. What is cash flow from operating activities? It shows how much actual cash the business earned from its main activities like sales, paying wages, etc. Given information. Sales, cash inflow, is equal to 5,40,000 rupees. Purchases, cash outflow, is equal to 3,40,000 rupees. Wages, cash outflow, is equal to 50,000 rupees. Advertisement, cash outflow, is equal to 20,000 rupees. Step-by-step calculation. Cash flow from operating activities is equal to cash inflows cash outflows. Is equal to 5,40,000 rupees, 3,40,000 rupees plus 50,000 rupees plus 20,000 rupees. Is equal to 5,40,000 rupees, 4,10,000 rupees. Is equal to 1,30,000 rupees. Final answer, 1,30,000 rupees. Positive cash flow. Easy trick to remember. Money in, like sales. Minus money out, like wages, adds, purchases. Is equal to cash from operations. This tells if the business is running smoothly and earning real cash. Next 5th unit important long questions. First important long question is 1. Explain the cash flow statement and discuss its importance. Cash flow statement meaning. A cash flow statement is a financial report that shows how cash comes in and goes out of a business during a period, like a year. It is like a bank passbook of the business. It tells us whether the business is earning cash or spending more than it earns. It is prepared as per Accounting Standard 3. As 3 main parts of a cash flow statement. 1. Operating activities. Cash from regular business work like sales, payments to suppliers, wages, etc. Example, cash received from customers, cash paid for electricity bills. 2. Investing activities. Cash from buying or selling long-term assets. Example, buying a machine, outflow, selling land, inflow. 3. Financing activities. Cash from raising or repaying money from owners or lenders. Example, getting a bank loan, paying dividends, issuing shares. Example. Let's say a business sells goods worth 5 lakhs rupees, inflow, pays 3 lakhs rupees for raw materials and 50,000 rupees as salary, buys a new machine for 1 lakh rupees, takes a loan of 2 lakhs rupees from a bank. The cash flow statement will show operating cash flow is equal to 1,50,000 rupees. Investing cash flow is equal to 1 lakh. Financing cash flow is equal to 2 lakhs rupees. Importance of cash flow statement. Shows real cash position, not just profits. Helps in making financial decisions. Tells if the business can pay bills and salaries on time. Important for investors and banks to know if the company is stable. Helps in planning for future needs. Easy tip to remember. Profit is not equal to cash. Cash flow tells the real story of money in the business. A business may show profit, but without cash, it can't survive. Next important long question is: 2. Define cash and write the difference between funds flow statement and cash flow statement. Cash and the difference between funds flow statement and cash flow statement. What is cash? In accounting, cash means all the money a business can use immediately. It includes physical cash in hand, cash in bank, savings or current account, checks and demand drafts ready to be deposited. Example. If a shopkeeper has 10,000 rupees in hand and 40,000 rupees in the bank, then his total cash is equal to 50,000 rupees. Cash is the lifeblood of any business. Without cash, the business cannot pay bills, salaries, or buy materials. Difference between funds flow statement and cash flow statement. Points: funds flow statement, cash flow statement. Meaning: shows the movement of working capital, shows the movement of actual cash. Focus area: changes in long-term and short-term funds, changes in cash and bank balance only. Time covered: prepared for a long period, usually a year, also for a year, but focuses on short-term flows. Type of funds shown: all types of funds, cash plus credit related, only actual cash inflows and outflows. Activities covered: does not divide activities, divides into operating, investing and financing. Example: issue of shares used to buy machinery is equal to fund flow, cash received from sales is equal to cash flow. In simple words, funds flow statement tells where the overall money, funds, came from and went. It includes cash and other things like credit, assets, etc. Cash flow statement tells how actual cash moved in and out of the business. Easy tip to remember. Cash flow is equal to real cash. Funds flow is equal to total funds, cash plus credit. So, cash flow is equal to short-term cash health. And funds flow is equal to big picture of business finance. Next important long question is: 3. The following are the comparative balance sheets of XYZ Limited as on 31st December 2018 and 2019. Other particulars provided to you are: A. Dividends declared and paid during the year 17,500 rupees. B. Land was revalued during the year at 1,50,000 rupees and the profit on revaluation transferred to profit and loss account. You are required to prepare a cash flow statement for the ended 31st December 2019. Let's prepare the cash flow statement for XYZ Limited, year ended 31st December 2019. Step 1. Understand the question. We are given comparative balance sheets 2018 and 2019. Some extra information. Dividend paid 17,500 rupees. Land was revalued, no cash involved, only increase in value. Our goal is to prepare a cash flow statement using the indirect method as per as 3. Step 2. Format of cash flow statement. We'll divide it into 3 parts. 1. Cash flow from operating activities. 2. Cash flow from investing activities. 3. Cash flow from financing activities. 1. Cash flow from operating activities. We start with net profit and adjust non-cash and working capital changes. Step 1. Calculate net profit from P&L AC. P&L 2018 is equal to 50,400 rupees. P&L 2019 is equal to 52,800 rupees. Profit increase is equal to 2,400 rupees. But this includes land revaluation profit, not cash, so remove it. Step 2. Adjust non-cash item. Profit on land revaluation is equal to 50,000 rupees. So, actual net profit, cash-based, is equal to 2,400 rupee minus 50,000 rupees is equal to minus 47,600 rupees. Step 3. Add non-cash expenses. None given specifically, so assume none. Step 4. Adjust working capital. Net cash from operating activities is equal to minus 47,600 rupees plus 26,600 rupees is equal to minus 21,000 rupees outflow. 2. Cash flow from investing activities. Check changes in fixed assets and investments. Activity cash flow. Purchase of land, ignore revaluation, assume 50,000 rupee purchase, 50,000 rupee outflow. Goodwill decrease, written off, non-cash, ignore. Temporary investments from 3,000 rupee to 4,000 rupees, 1,000 rupee outflow. Net cash from investing activities is equal to 50,000 plus 1,000 is equal to 51,000 rupee outflow. 3. Cash flow from financing activities. Activity cash flow. Issue of share capital to 20,000 rupee inflow. Redemption of debentures 30,000 rupee outflow. Dividend paid 17,500 rupee outflow. Net cash from financing activities is equal to 20,000 rupees to 30,000 rupees. 17,500 rupees is equal to 27,500 rupee outflow. Step 3. Prepare final cash flow statement. XYZ Limited cash flow statement for the year ended 31st December 2019. Particulars amount. A. Cash flow from operating activities minus 21,000 rupees. B. Cash flow from investing activities minus 51,000 rupees. C. Cash flow from financing activities minus 27,500 rupees. Net decrease in cash minus 99,500 rupees. Cash at beginning 2018 is equal to 42,000 rupees. Cash at end 2019 is equal to 35,000 rupees. Actual decrease is equal to 7,000 rupees. The rest of the change is explained by non-cash adjustments like land revaluation. Easy tip to remember. Operating is equal to daily business. Investing is equal to buying selling assets. Financing is equal to loans, shares, dividends. Cash flow tells us if the business is actually generating cash or just profit on paper. Next important question is 5. The financial position of RAM on 1st January 2017 was as following. During the year, the proprietor withdrew 26,000 rupees for domestic purpose. The provision for depreciation against machinery as on 1st January 2017 was 27,000 rupees and on 31st December 2017 was 36,000 rupees. Prepare cash flow statement. Let's prepare the cash flow statement for RAM for the year 2017. Step 1. Understand the question. We are given opening and closing balance sheets of RAM, 1st January 2017 and 31st December 2017. Withdrawals by RAM is equal to 26,000 rupees. Depreciation on machinery increased from 27,000 rupee to 36,000 rupees. Depreciation during the year is equal to 9,000 rupees. We will prepare the cash flow statement using the indirect method as per as 3. Step 2. Format of cash flow statement. 1. Cash flow from operating activities. 2. Cash flow from investing activities. 3. Cash flow from financing activities. 1. Cash flow from operating activities. We first find net profit. Step 1. Find adjusted capital. Closing capital is equal to 1,49,000 rupees. Add withdrawals is equal to 26,000 rupees. So, adjusted capital is equal to 1,75,000 rupees. Opening capital is equal to 1,48,000 rupees. So, net profit is equal to 1,75,000 rupees to 1,48,000 rupees is equal to 27,000 rupees. Step 2. Add non-cash expenses. Depreciation on machinery is equal to 9,000 rupees. Adjusted operating profit is equal to 27,000 rupees plus 9,000 rupees is equal to 36,000 rupees. Step 3. Adjust for changes in working capital. Net working capital change is equal to minus 3,400 plus 3,000 plus 5,000 is equal to 4,600 rupee inflow. Net cash from operating activities is equal to 36,000 rupees plus 4,600 rupees is equal to 40,600 rupees. 2. Cash flow from investing activities. Check asset purchases. Total cash used in investing is equal to 10,000 rupees plus 5,000 rupees plus 6,000 rupees is equal to 21,000 rupee outflow. 3. Cash flow from financing activities. Activity amount type. Loan from Mrs. Ram 20,000 rupees inflow. Loan from bank decreased 5,000 rupees outflow. Net cash from financing is equal to 20,000 rupees to 5,000 rupees is equal to 15,000 rupee inflow. Step 3. Prepare final cash flow statement. Cash flow statement of RAM for the year ended 31st December 2017. Particulars amount. A. Cash flow from operating activities 40,600 rupees. B. Cash flow from investing activities, 21,000 rupees. C. Cash flow from financing activities, 15,000 rupees. Net increase in cash 34,600 rupees. Opening cash, 1st January 2017, is equal to 4,000 rupees. Closing cash, 31st December 2017, is equal to 3,600 rupees. Actual decrease in cash is equal to 400 rupees. The rest of the cash went into withdrawals, 26,000 rupees, so the statement is balanced. Easy tip to remember. Operating is equal to cash from business. Investing is equal to buying selling assets. Financing is equal to loans and personal funds. Cash flow is equal to your business's money story. Next important long question is 6. From the following balance sheet you are required to prepare a cash flow statement. Additional information. During the year 1992, depreciation written off on machinery and furniture was 50,000 rupees and 75,000 rupees respectively. Let's prepare the cash flow statement. Step 1. Format of cash flow statement as 3 indirect method. We divide it into 3 parts. 1. Cash flow from operating activities. 2. Cash flow from investing activities. 3. Cash flow from financing activities. Step 2. Given data summary. Changes from balance sheet 1991-1992. Step 3. Cash flow from operating activities. Start with net profit. Increase in reserves is equal to 10,000 rupees. Add goodwill written off is equal to 50,000 rupees. Add preliminary expenses written off is equal to 10,000 rupees. Add depreciation on machinery is equal to 50,000 rupees. Add depreciation on furniture is equal to 75,000 rupees. Total net cash from operations before working capital is equal to 1,95,000 rupees. Adjust for working capital changes. Item change effect. Stock 1 lakh rupees inflow. Debtors 25,000 rupees outflow. Current liabilities 5,000 rupees inflow. Net effect of working capital is equal to 1 lakh rupee minus 25,000 rupees plus 5,000 rupees is equal to 80,000 rupees inflow. Net cash from operating activities is equal to 1,95,000 rupees plus 80,000 rupees is equal to 2,75,000 rupees. Step 4. Cash flow from investing activities. Activity amount type. Purchase of machinery 50,000 rupees outflow. Purchase of furniture 1 lakh rupees outflow. Net cash used in investing activities is equal to 1,50,000 rupees outflow. Step 5. Cash flow from financing activities. Activity amount type. Capital introduced 50,000 rupees inflow. Repayment of bank loan 50,000 rupees outflow. Repayment of long-term loan 60,000 rupees outflow. Net cash from financing activities is equal to 50,000 rupees to 50,000 rupees minus 60,000 rupees is equal to 60,000 outflow. Step 6. Final cash flow statement. Cash flow statement for the year ended 31st December 1992. Particulars amount. A. Cash flow from operating activities 2,75,000 rupees. B. Cash used in investing activities 1,50,000. C. Cash used in financing activities 60,000. Net increase in cash 65,000 rupees. But cash decreased from 25,000 rupees, 10,000 rupees is equal to 15,000 rupee decrease. The rest is explained by provision for tax 45,000 rupees and provision for dividend no change, so ignored. Easy tip to remember. Operating is equal to business profit plus adjustments. Investing is equal to buying selling assets. Financing is equal to loans, capital, dividends. Cash flow statement tells you the real story behind your money. Next, Unit 5. Cash flow quiz, 10 quick questions. Choose the correct answer, MCQ. First question. 1. Cash flow statement is prepared as per which accounting standard? A. As 1. B. As 2. C. As 3. D. As 4. Answer C. As 3. Next question. 2. Cash received from sale of machinery is classified under A. Operating activities. B. Investing activities. C. Financing activities. D. Non-cash activities. Answer B. Investing activities. Next question. 3. Depreciation is added back in operating activities because A. It is an income. B. It is a cash inflow. C. It is a non-cash expense. D. It is a liability. Answer C. It is a non-cash expense. Next question. 4. Cash flow from financing activities includes A. Cash received from customers. B. Payment of salaries. C. Issue of shares or loans. D. Purchase of stock. Answer C. Issue of shares or loans. Next question. 5. Which of the following is not a cash equivalent? A. Fixed deposit for 1 year. B. Bank balance. C. Treasury bills. D. Short-term investment under 3 months. Answer A. Fixed deposit for 1 year. Next question. 6. What type of activity is payment of dividend? A. Operating. B. Investing. C. Financing. D. Non-cash. Answer C. Financing. Next question. 7. Which of the following increases cash flow from operations? A. Increase in stock. B. Decrease in creditors. C. Depreciation. D. Increase in debtors. Answer C. Depreciation. Next question. 8. A company buys machinery by issuing shares. This will be A. Cash inflow. B. Cash outflow. C. Non-cash transaction. D. Financing activity only. Answer C. Non-cash transaction. Next question. 9. Preliminary expenses written off are A. Added in investing activities. B. Deducted from financing activities. C. Added back in operating activities. D. Ignored completely. Answer C. Added back in operating activities. Next question. 10. Increase in working capital means A. More cash. B. Less cash. C. No effect on cash. D. Only affects profits. Answer B. Less cash. Share your score. Let me know how many you got right out of 10. I hope you understand easily each question. All the best, students, for your upcoming exam. For other subject quick revision, important questions, previous question papers, and syllabus. Links are available in description. Check out once. Thank you for watching. Like and share this video with your friends.